On the supplier side, you can enter bills and supplier credits again through the plus button in the top left of QuickBooks. So if I go to the plus button here, under suppliers, you'll see a bill entry and you'll see lower down a supplier credit. So bill entry is a purchase invoice. So you've received an invoice from a supplier. You've got a period of credit, a period over which you can pay it. So we're not saying about the payment of the actual bill or supplier invoice. We're actually entering the details of the invoice. If you've got your supplier invoice in front of you, you can complete the form here to say, I've got a bill from a particular supplier, and we could pick that particular supplier name, or we could add it in, and we'd put the date from the bill. So we get the bill on the screen, and it may have taken a while to arrive by email or post, and it might be dated perhaps earlier, and we put it in there. We can specify a term of when that payment is due. Perhaps they'll give you 30 days to pay. We can also populate a bill number, which will be the invoice number from the supplier invoice. And under category, we will select the appropriate expense code in here. So it may well be that we have actually here purchased something. We've got 30 days to pay. It's to do with an internet expense, a computer expense, for example. So we pick the right category here. We can put a description in here as to what we've purchased. And also we can put, this is set to exclusive, we can put an amount in here. Perhaps we spent £50 plus VAT because we've got a VAT receipt for a particular product that we're going to pay for in 30 days time. So that completes the picture in terms of the cost. Total cost will be £60. It's put it against the right category of expense, and it's going to show in our records that we owe this money until it is paid off. So that's entering a bill into QuickBooks. We've got an option at the bottom also to attach a copy. Perhaps we've got a PDF that we can drag into there to attach a copy of the bill if you want to work towards a paperless office. So if we save that particular bill in our QuickBooks file, it is now recorded that we owe that money to the bank of any city, who is our supplier in this case. So that's entering a bill in QuickBooks. If we go back to our plus sign here, the opposite of a bill in here would be a supplier credit. So if we actually returned that item saying that it was faulty, for example, we may well get a credit from our supplier to say, put a credit on your account. So a supplier credit, again, we would apply in here. So perhaps we've gone and returned the goods that we bought on the previous bill. We'd pick the same supplier, we'd pick the date on the credit that they provided to us, and we would put it against the same expense code that we originally put our bill against. Again, we can describe it and we can put the amount of the refund into the program here. So again, this is the exact opposite transaction to the bill we entered earlier. So in a sense, cancelling that bill out by issuing a supplier credit in QuickBooks. So if I save that, we've actually recorded a bill against that supplier. We've also recorded a credit against supplier for the same amount. So that, through the plus sign here and suppliers, is entering bills, but also putting credit notes against suppliers. And bills and credit notes all relate to transactions where we're not actually paying the money until a future time. So there's a period of credit involved when you're dealing with bills and supplier credits.